Welcome back to Iraqi Dinar Alert. The Iraqi dinar is one of the most debated currencies out there, especially for investors watching the Middle East. While things like oil revenue and political stability obviously play a huge role, one big question keeps popping up: is the US Federal Reserve messing with the Iraqi dinar? The short answer is yes, but probably not in the way you think. Vic. The Fed doesn't directly control the dinar, but its decisions create powerful ripple effects that impact everything from Iraq's banking system to the exchange rate you see on the street. Let's break down exactly how the US Fed influences the dinar today. First, why does the Fed even matter to Iraq? It all comes down to the US dollar. Iraq is a dollar-based economy. Nearly all of its oil revenue, which is its main source of income, is paid in dollars. It uses dollars for international trade, imports, and its own currency auctions. And who regulates the US dollar globally? The US Federal Reserve and the US Treasury. So, even though the Fed isn't managing the dinar, its control over the dollar gives it major indirect influence. Over the last few years, the Fed has really turned up the heat on Iraqi banks. This is mainly because of concerns about money laundering, illegal dollar smuggling, and transactions with sanctioned countries. As a result, the Fed put tighter controls on how Iraqi banks get their hands on dollars, and which banks are even allowed to participate in dollar auctions. Whereas, when the Fed tightens these restrictions, the supply of dollars inside Iraq shrinks. And when dollars become scarce, the dinar gets weaker on the parallel market, leading to price swings and inflation. This brings us to the dollar auction system. The Central Bank of Iraq, or CBI, uses these auctions to sell dollars to local banks to keep the dinar stable. But here's the catch: the US Federal Reserve ultimately controls how many dollars Iraq can access for these auctions. If the Fed approves Iraq's requests, the market stays calm. If the Fed slows down or restricts those dollar transfers, the local market gets tight and the dinar weakens. We saw this clearly in 2023 and 2024 when the US brought in stricter rules. Suddenly, there was a dollar shortage, the street exchange rate shot up, and prices for imported goods went through the roof. And it's not just about direct controls. US interest rate decisions also have a huge impact. When the Fed raises interest rates, the dollar gets stronger worldwide. These makes other currencies, including the dinar, weaker. It also makes imports more expensive for countries like Iraq. On the flip side, when the Fed cuts rates, the dollar usually weakens a bit, giving other currencies some breathing room. So, even though Iraq can't control US policy, the Fed's decisions ripple all the way to Baghdad. DS has also been a major force pushing Iraq toward financial reforms. We're talking about things like digitizing payments, cracking down on illegal currency traders, and applying global anti-money laundering standards. These reforms are monitored by the US Treasury, the Fed, and the IMF. While these changes are great for Iraq in the long run, they can cause some short-term pain, like reduced dollar access and exchange rate instability, as the system adjusts. Sanctions are another powerful tool. When the US finds that certain Iraqi banks or companies aren't playing by the rules, they can get cut off from dollar auctions and international wire transfers. This not only hurts those specific banks, but also shakes public confidence, causing the dinar to become unstable. Even Iraq's foreign reserves aren't completely independent. Since Iraq's oil money comes in as dollars, it's processed through institutions like the Federal Reserve Bank of New York and other US-regulated networks. Any delays or compliance checks in this system can affect how quickly Iraq can access its own money, which in turn impacts the CBI's ability to manage the dinar's value. So, does the Federal Reserve control the dinar's value? No, not directly. The Central Bank of Iraq sets the official exchange rate. However, the Fed heavily influences all the key factors that allow Iraq to maintain that rate: the dollar supply, banking rules, sanctions, and global interest rates. And what about a potential revaluation? A major change in the dinar's value would require full transparency, strong anti-corruption measures, and a modern banking system. The Fed's pressure is actually pushing Iraq toward these reforms, but it's unlikely to sign off on any dramatic moves until Iraq fully meets these international financial standards. This means US oversight could delay a revaluation until the foundations are solid. So the final verdict is, yes, the US Federal Reserve has a significant indirect impact on the Iraqi dinar. It doesn't set the price, but it definitely shapes the entire economic environment. To put it simply, the US doesn't control the dinar, but Iraq can't stabilize or strengthen the dinar without cooperating with US financial rules. Thanks for watching. If you found this breakdown helpful, be sure to like, subscribe, and hit that notification bell for more updates.